Good morning, traders. It is Tuesday, October 14, 2014, at 8 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. A look at the overnight data and news shows that there's more bad news out of Europe. The German zoo expectations number misses. It comes in at negative 3.6 versus 0.0 consensus. Current situation 3.2 versus 15. That is a big miss. French September CPI also misses at negative 0.4 month on month. Consensus negative 0.3. So far 0.3% year on year. Consensus 0.4. Eurozone August industrial production also misses. Month on month comes in at negative 1.8% versus negative 1.6% expected. UK September CPI is lower year on year, 1.2 versus 1.4. CPI core 1.5 versus 1.8. So not so great. The market is a little bit shaken. I think these last few days have definitely sold off more range than I'd expected, and the bad news still continues to come out of Europe. This morning, J.P. Morgan Q3 EPS misses 1.36, $1.36 versus $1.39. The results came out early. It also announced that there's a new investigation or further investigation going on. I think it's Mexico or something. So maybe they're expecting a fine. J&J, Johnson & Johnson, came in at 1.5 versus 1.44, $1.50 versus $1.44, and it boosts its forecast. That stock was up as much as 1.5%, I think, overnight. Citigroup, $1.15 versus $1.12, so it beats. It says it plans to exit 11 consumer banking markets worldwide. Citigroup also experienced a pop on that news. Wells Fargo, $1.02, and is in line. And then finally, the U.S. CDC, which is the Centers for Disease Control, say that there was no Ebola scare at the Logan Airport in Boston. There were reports that several people were taken out of that flight that was diverted. It's an Emirates flight that had to make an emergency landing in Boston. It was said that several people had been removed from the airplane by people in protective gear. Those people were exhibiting flu-like symptoms. The CDC says that there's just a very, very low chance that those people had Ebola, and they're being monitored. So we have a 1-2 punch to the market here between Europe and the issues that Europe has, and this Ebola problem. Looking ahead at today, I'm seeing Fed discount rate minutes at 1 o'clock Central. Fed discount rate minutes. And the U.S. monthly budget statement, $72 billion expected. I don't have a time for the monthly budget statement. Not sure when that comes out. And then as far as speakers, I have UK's Great Britain's Cameron is being questioned by UK lawmakers on Scotland. I'm not sure how much of an impact that'll have on us. At 10:30 Central, we have a 3- and 6-month T-bill auctions for $51 billion, and that's it for today. So Fed discount rates, monthly budget statement, and then an auction is really what we have on deck for today. Let's look at the markets. So yesterday, I was looking for, based on yesterday's Trader Bite, if you attended it, I was looking for a lower low at some point between because of the way we closed on Friday. We closed on a low tick on some heavy negative delta. And I was looking for a lower low either yesterday or today. Yesterday, with the treasuries closed, the expectation was for a choppy, wide-ranging but choppy day. What we got was a lot of volatility as a continuation of prior days. But overall, the plan for yesterday was for a test of 103.25, the prior day's low volume node, and a potential push to 9.25. I expected selling to be abated. I expected it to take a rest, but I did expect a lower low, and what it did is it pushed to 1906, so right through that 3/4, and then it made a lower low. It broke it broke into a gap zone here at 86.50 down to 84, 86.50 to 84 from May 26th, and it held that 84 pretty good for a bounce back up. It got back into the range. It traded around the mid, and it looked like the chop hypothesis was going to come true, and it would just sit here and chop around most of the day. Yesterday's range was expected to be between the Friday close and this 15.15 up here, the volume point of control. And really, it didn't trade the way I'd expected. It pushed to 1906, just 2 ticks below 1906, which was double the IB high here, which was the high I put in this morning. Double IB high has a statistical edge. It was expected to break higher. We had a nice pullback to the mid. That here, let me go to a higher Renko because there's a lot of noise here in this trade. So if you look at the bounce from 84 back into the mid, nice rotation down, a little bit of heat, but nice rotation down, and then we chop with an upward skew, get up to 1906. We have a double IB high in 1906, a double top on the day. Expectation is for a pullback and a break, generally expected 1899. If not, then expected the mid to hold for a rotation back into 1906 and to break it by at least a tick. You can see here, pulled back right to the mid, this blue line, and held very nicely for an 8-point rotation. But then it came all the way back and started to fall through, and that's when this stat got into trouble here. It looked like it wasn't going to work anymore. And then we had sellers step in in the afternoon and just push lower. We closed on the low again. The market's just telling us that it's not able to find aggressive enough buyers to hold prices up. So the expectation into the overnight is for a lower low. And then for today, same thing as yesterday. Really, I'm just repeating yesterday's trader bite. The expectation is for it to retest 1884 this morning. I'm expecting a lower low on the day session. Not sure if we'll get it during the day or not. But overall, I'm expecting the market to stabilize in this area. If it breaks 1884, the 94 is next. We still have a weak high at 1906. So if buyers really come in, the 1906 would be the first key target, and then we start to work our way through the levels up top. But so far, the market's is not finding buyers strong enough, and the central banks are allowing this to fall right now. I'm not seeing a parade of Fed speakers saying they'll do whatever it takes to support the market just yet. So it's I don't, politically, we have elections in about 3 weeks here in the U.S., 3 weeks from today. election Tuesday, the first Tuesday of November. So I'm not sure how much this is likely to be allowed to fall here. I'm sure a few people are nervous, but overall, this looks to me still like a normal pullback. I'm not seeing anything outstanding here that says, the long time frame. And I had covered this on Day Trading Radio yesterday. I'm just not seeing this. I'm not seeing the higher time frame, the high time frame, the long term position traders stepping in here and selling on very high volume. Overall, this thing's pretty controlled. We're holding at 2.2 to 2.5 million contracts on pretty wide ranges now. But this does look a lot like some of the pullbacks we've had before, although 3 days in a row has not happened in quite some time when I go back and look at the S&P. So I'm watching carefully here. I do not mind the sell-off. I think it's healthy for the market. I think it helps revalue the equities that the S&P 500 represents, and it shows us it takes care of any excess. At least in the short term, it takes care of any excess or any froth, and it makes for a much more sustainable investment market. So this isn't all bad. Although yesterday's sell-off was pretty steep. Again, I did not expect this to happen. So I'm cautious. I'm still looking for still looking for a little bounce, even if it's a dead cat bounce. But still looking for a bounce here. 4 days in a row on wide-ranging days is very, 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 very rare. In fact, it did not occur in the sample that I tested yesterday. So I'm looking for this to bounce today. I'm looking for any test lower to be taken back up. If you look at the overnight session, here, a nice push to 78 early on, and then we sell off on the German and European numbers, and then we bounce right back up on the Citibank and J&J numbers, and are holding prices higher. So I'm looking for the market to hold these areas. I think that the 72.50, 72 area is important to watch. I would start to get nervous if I were long into that price. Currently trading 77.50. We'll see what it does this morning. I think today is going to set the mood for the rest of the week, but I'm going to caution you again on getting stubborn with markets such as these, because it can go farther and faster than you think, given that we've been in a very sluggish and sleepy market for quite some time on the rally. So this is the time to kind of, when they say keep your powder dry and be prepared, this is what we prepare for. This is the time when you take advantage of good habits and your discipline to extract something out of the market. But this is also a time when risk is elevated, and any pause or any doubt is punished heavily, since these are leveraged products that we're talking about here. So this morning, I expect responsive selling. I expect some selling. It's not really responsive since value is above, but I expect a little bit of selling on the morning. It might make a lower low. Not sure if it could, but might make a lower low because of the way we the stance that we have. I'm watching 72, 72.50 to see what reaction we get there. If it lets that go, then I'm expecting a lower low and a potential test of the overnight low. I want to remind you that 62.50 is pretty decent support. If we go back, hang on, I think it's a composite that should better. If we go back to this area here, you could see that 62.50, just look across this line here, 62.50 was a really tough area for the market to get on top of back in this super, super, super long and super boring trade at the beginning of 2014, from the middle of February all the way to the end of May. We just could not hold above 62.50 for long before falling off. It had a hard time closing above that price. 62.50 represents some pretty decent support below, as far as I'm concerned. And then below that, we have 61.50, which is the midpoint of this large swing here. If you take the swing low from February 5th to the high of 2012, 75 that was put in on the December, these prices are all equalized and adjusted for rollover. So take that into account. And if you look at the midpoint of this pullback, it gives you about 61.50. Those are there's a little bit of confluence on the support down there. I'm watching what happens as we get down there. It got pretty close yesterday with a low 65, but we'll see what happens when we get, if we get to 62.50. I expect that there will be a decent bounce off of that. But overall today, I expect a small sell-off, but I'm looking for a pushback into 84 through the 86.50 and a potential test of 94 this morning. So I expect that to happen in a choppy way. I expect buyers to be a little bit timid, you know, for the short term. Again, this is not exactly a sell-off or a crash. This is more of a correction given the magnitude of the rally that we've had. And all you have to do is look at how we've moved this whole year. This is really not that much more than what we had earlier in this year. This pullback from 1824 to 1709 is very, very similar. So anyway, I'll leave you with that. Again, I would implore you to just watch your risk. Watch your risk. Be a trader. Don't be a gambler. Don't get sucked into the noise. The book is very thin. It's going to continue to be very thin. The VIX is up. Look at the extent of how strong the VIX is. Okay, it's broken. It's broken through the last few tops. It's fairly strong. So we're back in the VIX. You know, we're looking at the VIX from back in June of 2012. So there's a lot of volatility here, and the book will remain thin as a lot of systems are likely to trip off or switch off once certain volatility levels are exceeded. So just keep an eye on your losses so you can stay in the game long enough to get used to this sort of movement and then to finally take advantage of it. One more thing, speaking of the Russell here with the alert, I want to show you that something interesting had, despite yesterday's sell-off, this is what we had in the Russell. The Russell played out much better as far as the plan for yesterday. It played it out much better. It went deeper, a lot deeper into Friday's range, and it did not make a lower low. So small caps, which have been leading this charge down, so if you look at small caps, they're definitely off a lot more than the S&P 500. It did not make a lower low yesterday. It held pretty firm. So it's kind of curious that it did that. The Nasdaq, on the other hand, has been falling pretty steady with the S&P, but again, not as strong a drop as the S&P 500. It seems relative to the other indices, the S&P is a little bit overdone, and that's part of the fact that I'm considering in support of the idea that we're likely to bounce up today and head towards 84, 86.50, and then 94. So look out for that. I wish you the best of luck, and I'll catch you tomorrow. Take care.